Hi, it's Brianna from Red Lips and Nails here with my husband Eric. And after a couple weeks of a hiatus, he was sick and I was out of town and there was a whole bunch of crazy happening, so we apologize. He is alive. We're very happy that he's alive. But we're picking back up on our Money Management Monday and just in time for tax preparation time. So we want to ask Eric some questions, and if you have any follow-up questions, you can certainly email me or send me a message, but really want to talk to you about how to prepare for this tax season. So Eric, can you tell us what are some of the most important dates and things that we need to know going into this year's tax season?
Absolutely. So the one that's going to be the most important for everyone is that everybody is usually familiar with April 15th. That's the tax filing deadline for individuals. It's a little bit different this year because the 15th falls on a Sunday. So the deadline this year is April 17th.
You have two extra days.
Yeah, so it has to be postmarked. So that doesn't mean you can drop it off in the big blue can on the 17th. It actually has to be stamped. So if you do wait till the 17th, make sure that you either file it electronically so you can get a confirmation, or you take it inside, have them stamp it so you know you're in good shape. It's always, a lot of people don't know that, but it has to be stamped. Also, another very important date, if for some reason you own a business that is either a C corporation or a partnership or an S corp, I'm using a lot of different terminologies, but a corporation, and you file either a 1065 or an 1120S or an 1120, the date you're going to need to know is March 15th. So if you have a K1 that flows into your personal return, you're going to need to know March 15th. I'm sorry.
I'm going to need the 411 on the K1.
I went deep
I'm just
there.
kidding.
Yeah.
If you are a business or corporation, you'll know what those things are, right?
You hope.
Or your tax guy does. My tax guy does.
Hopefully you have a tax guy.
Hopefully you have a tax guy.
Hopefully you're not.
Speaking of which,
yes.
So this is a real confusing process, and there's a lot of terminology and words that like just the general population, myself, doesn't understand.
Mm-hmm.
So how can this be simplified? Like, what tips do you have that you can share that will just make this a little bit easier for people?
Yeah.
Because nobody likes tax season. Nobody likes doing their tax. That's crazy. Nobody likes it.
Yeah, I do them and I don't like them. So I think it's important. So I think it's totally fine, totally acceptable for people that want to do their own taxes or they want to utilize TurboTax or Tax Act. There's a lot of great programs out there. So if you have, you just get a W-2, maybe you don't itemize, feel free. It's probably a 1040.
We're going to circle back to that term because I just learned what itemizing truly means.
Yes,
Continue.
so you could file a 1040EZ, very quick. Those programs sometimes don't even charge for that because it's so simple. Also, if maybe you have different forms of income, but you don't need to itemize, you could utilize maybe a 1040A. That is, very similar to the normal 1040, but it doesn't allow you to actually itemize. So,
and those are available on those web-based.
Absolutely, it'll take care of it for you. It just basically, the more complex your return gets, you go from a 1040EZ to a 1040A, all the way up to a normal 1040. So the 1040 is really kind of like all the nuts and bolts. And it has the ability for you to record basically all of your income and then also itemize as well. And so one of the questions you would ask is, what is
actually, right before we filmed this, I was like, I don't really know what itemizing means, which might be embarrassing for me. I'm not sure. But I don't think that a lot of people really, truly get what that means. And so Eric just explained it to me, and I'd love for him to explain it to you.
Sure. So some people, you'll hear that term thrown out. Kind of itemized deduction or standard deduction. If you are single, your standard deduction amount for 2017 is going to be $6,350. If you are married filing jointly, it's going to be $12,700.
So to clarify, that's the amount that like the government says this is just a standard blanket amount, and if you would deduct less than that from your taxes, then you should go with the standard deduction.
Yes. So the floor is the standard deduction, either being $6,350 if you're single, or $12,700 if you're married. So that is the least amount you will take in deductions to offset the income that you've earned.
Got it.
If you are over that amount, congratulations, you're itemizing. Right?
Is that a real congratulations or no?
Yeah, it's typically
Can be.
better because
Okay, better.
that means you're going to pay less in tax.
Got it.
Right? So how you eventually, one may ask, okay, well, I don't itemize now. What would happen in life for me to
Wait, but
itemize?
let's go back. Let's rewind for a second. Who would be the people who don't itemize, like most likely?
More than likely, if you don't own a house or you don't have a large amount of charitable contributions, or I guess you could get there depending upon actual sales tax paid. You'll never get there if you utilize the table, which is they plug your income in and say, normal person would spend this much money and you paid this much in local tax. So you're going to either need to own a home or have a very large amount of.
What if you own your own business and you run everything through your business? Would that be it? Oh, but that's different because it's a
different
business.
Yeah, that'll be
Okay,
on
never
either
mind.
Schedule E or Schedule C.
Got it. So back to what you were saying then about itemizing, and you were saying something.
Yes. So if you somehow you say you've never itemized before, you always took the standard deduction. Things change in life, right? So you could have a kid. That could impact.
You can get married.
Yeah, you can get married. You can buy a house. A lot of times, what triggers that is you buy a house. What comes into play there is you've got mortgage interest that you can actually write off now that you never had the ability to do that before because you can't write off rent. Then you also have property tax. And then so when you couple that with your sales tax, property tax, mortgage interest, charitable contributions, you can see how you can end up over that 12,700 number. So just kind of, if life is moving on you and you've got a lot of things that are happening, if you don't have a sales tax, or not sales tax, if you don't have a tax professional or somebody you can call to ask these questions, I would highly suggest you look into that. And if you're a do-it-yourselfer, congratulations. Dig in and learn it because it probably will change what you're used to. Also, 2018 is coming, the new tax plan.
That's a good point. A lot of people were thinking that the new tax reform is going to impact this year's filing, but it's not. It's next year.
Yeah.
So
it goes into effect for the time period January 1st through December 31st, 2018. Not 17.
So this tax return is, you can expect similar to, unless you had major changes, you can expect it to be what it's been because it's not changing yet.
Yeah.
Or it is, but you get it. You get what I'm saying.
Yeah. Status quo.
Yeah, status quo as of 2017. Any final words of wisdom for people filing? I think that the thing that if I was not married to a CPA, which is fortunate on my behalf, but I think that I would
Sometimes.
most of the time. I would say I would prefer probably to talk to a person about my taxes. So what is your opinion on using online versus a person? Or those major companies that do mass tax returns?
Yeah, I think, for me, I'm a fan of finding somebody that does this for a living. And no offense to, some of the major corporations that, pop up stores and do tax returns. I like having the consistency, right? So your life changes. Nothing better than having somebody that understands what you're going through in life and can kind of lead you and guide you through that, and is always going to be doing this. They just didn't grab the job to make some extra cash during tax season. And
by the way, this is not a plug because he's not taking any additional tax clients.
Yeah. So no, it's just one of those things to have that person that you can rely on. And it's, I have people that reach out to me all the time and they're saying, oh my gosh, I had a guy and something happened. They weren't there anymore and they told me I could do this. Now somebody's telling me different. That's the beauty of having that designated tax professional.
And someone that you have a relationship with. I imagine it could be a little scary if you're all of a sudden owing an amount and it was unexpected. They can explain it to you and really walk you through things, or potentially find more ways to deduct things or whatever it is. Mm-hmm. So
they can also, if they're a CPA or a registered agent, they can also represent you. to the IRS. So that's a huge benefit. There's a reason why you pay more for them is because they have that ability to do that. Nobody else can do it unless they're also an attorney or something. But so there's a lot of benefits to that, and it is expensive, but it's also that peace of mind whenever you submit it, you know that it's done correctly, because it is very, very complicated. So I would just say make sure you're organized. You need to be organized if you're going to be successful. A lot of people dread it because they don't do anything throughout the year, and they wonder why, oh my gosh, I have all this paperwork, and my CPA is asking me for this or that or this software system.
My CPA recently asked me for my mileage last year, and thank God I wrote down my stuff.
Yes. So, be organized. Understand when they ask you these questions, they're going to need it again next year. So make sure, especially now with smartphones, there's plenty of apps.
There's so many apps.
You can get your mileage. You can do that. You can take pictures of your receipts. Everything is there. Yeah. So if you stay on top of it throughout the year, when you get to the end, it's very simple. So
your CPA will thank you.
Yes, and probably charge you a lot less. So, because junk in, junk out, it's also very difficult for them to really try to maximize, your deductions and reduce your liability. So, think through it. If you have questions, ask them. That's exactly what they're there for. And I think it'll be a pretty smooth process if you do that.
All right. So I hope that was helpful for you. I think the big thing for me is I didn't understand necessarily what, if like I said, if I were a single person, I honestly don't know if I would do the standard deduction or if I would itemize. Like, I don't know. So I thought that was really great for me to know. So hopefully that helped you if you're not already a tax and financial wizard. If you have any additional questions, as always, please shoot me an email and we'd be happy to address those with you just on the side. Not tax advice, because we're not doing that unless you're like an actual client.
She can give you tax advice.
You don't want tax advice from me, I promise you that. But we will definitely point you in the right direction, or we'll give you tools and resources that will help you or something like that. So thanks for watching, and we'll see you next week.
Bye, guys.
Bye.